Before the 2016 recession, Nigeria's economy was growing fast at 36.3%. By contrast, before COVID-19 struck, the economy was growing at 2.2%, as inflation was in single digits in 2014 compared to about 12% in 2019. The economy likely remained under marked stress in Q3 following the steep GDP contraction in Q2 due to pandemic-induced lockdowns and collapse in oil prices. As Nigeria grapples to overcome the adverse effect caused by the coronavirus pandemic on the economy, leading to the country to its worst recession in 5 years, the reality of a second wave of the coronavirus pandemic, if not well managed, experts say would have a devastating effect on the already battered economy. I have joining me now live via Skype from Owerri, Imo State, to discuss more on the impact of the second wave of COVID-19 on the Nigerian economy and, of course, other issues. Is the chief consultant of B. Adedipe Associates, Dr. Abiodun Adedipe. Dr. Adedipe has consulted and facilitates for the Central Bank of Nigeria major policy issues, new directions, including as a team leader for credit markets in finance sector strategy and as FSS 2020. He has also been involved in strengthening the strategy and strategic management process in several Nigerian banks, non-financial businesses, and not-for-profit organizations. Thank you very much for your time, Dr. Adedipe. Happy New Year to you.
Thank you very much, Tolu, for having me, and a Happy New Year to you also.
Okay, Dr. Adedipe, let me start this way. We spoke before the new year and a lot of projections for Nigerian economy, talking about growth and all of the figures. But now the second wave is real. We see what is happening. The figures are on the high side. How do you see this affecting all of the projections? Are we going to have reprojections or new projections will be out from all of the agencies that give us these figures?
Yeah, thank you so very much for that question. Obviously, all the projections we had towards the end of 2020 will have to be revised in the light of the realities of today and what we expect to happen in the rest of the year. And I will start from the perspective of the first thing you mentioned, and that is the second wave of COVID-19 in Nigeria. Now, at the time we were making those projections for 2021, towards the end of 2020, many of us were not considering that Nigeria possibly will have this second wave, in the sense that the expectation of the first wave was not as that, let me say, negative as we earlier expected. So we didn't think, therefore, that there was a need to factor in the second wave. But the reality today, looking at the data, is that second wave for Nigeria is in fact looking more deadly from two perspectives. One is the number of people that have contracted COVID-19. The second, of course, is the number of resulting fatalities. So that means, therefore, that like we expect, for example, that IMF that will come out with its outlook for the year on the 26th of January will likely reflect the impact of the second wave. And of course, the World Bank has issued its own global, expectation for this year. So clearly, a number of us that do make some bit of forecast and also some prediction of where the economy will likely go, we have to return and factor this into that reality. And it goes this way. One is, how is government likely to react to this? I will place that beside how governments around the world have reacted to the second wave of COVID-19. So the indication so far is from our own government that there won't be a consideration of a lockdown. So if the government doesn't lock down the economy the way we did with the first wave, then we may not see major dampening of those projections that we made. So we may therefore not see any major difference in what we expected by end of 2020 and what we expect to happen at this point in time, looking at the rest of the year.
That is a tough one. Now, Dr. Adedipe, recovery also, analysts say, is based on the vaccine rollout. What would happen if the vaccine maybe becomes not very efficient, or there are even issues about the distribution What happens to Africa's most populous nation at this time with issues around vaccination? What do you think? What positives do you see in that?
Well, that is a major issue that is not only being discussed in Nigeria, but around the globe. And that talks to efficiency of the logistics of distribution. And of course, we saw, a statement issued by the government towards the end of last week. It was in the news, I think, yesterday or so, as to how this will likely go in terms of distribution across the states. But I also imagine that the way Nigeria will approach it is to first of all identify the most vulnerable people. And that will be first and foremost the frontline medical personnel, the caregivers, and then look at the population itself and ask ourselves that there's a difference, by the way, from what we hear from the scientists about those who are impacted more by this second wave compared to the first wave. So if younger people are now also being affected by the second wave, then it means that the people that we identify as most vulnerable will not necessarily be those we said we are vulnerable in 2020. So that also will be an issue in the distribution. I expect our government to apply data and science in determining distribution. It's not just about geopolitical zones, 6 of them, or we talk about just mere population distribution. We have to look at not only the distribution of population, but also look at the population of those we identify as vulnerable scientifically. So that should not be a factor in how we distribute this. If we do that, and it can be proven scientifically, then we might begin to see how this will impact economic activities. So and then relate that also to the structure of our economy. The big part that informal sector plays, accounting for close to 52% of our GDP, before we now bring that to MSMEs on the other hand, quick connects to manufacturing, big factor in there. Over 91% of manufacturing entities are SMEs. So all of these have to be taken into account in balancing the distribution of the COVID-19 vaccines. So all of these, when we put them together and see that science informs what the government does, then we might likely see the impact being better managed, and therefore also we can make sensible projections of how this will play out. But if we depart from that, and that is the warning I'm sounding here, if the distribution is politically motivated, or we allow geography only to be the factor in this, and we refuse to follow science, then the impact on our economy will go differently, because sentiments will come into that. Once sentiment comes in, emotions will also come in, and then you see economic agents reacting rather than responding to what the government is doing.
That is really key. Dr. Adedipe, we've seen governments come out with budgetary plans, talking about spending plans for the year 2021. Many have come out to say, yes, it's timely. Look at a state like Lagos is out with a budget of 1-point-something trillion naira. The federal government is also out with about 20.6 approximately trillion naira budget. Now, being timely and implementation, I think there are two different things. Now, people have come out to now say, what should we expect? The Finance Act supporting this budget. What are the positives you see coming out in 2021? I don't think it's all about bad news.
Yeah, really, for me, the first thing we must acknowledge is the fact that the budgets are coming out on time. But we had to move away from that practice we departed from for so many years. Maybe, in fact, we can talk about decades, all right? Now, coming back to that, where we start a new year and there is a budget already signed into law, that is a positive for us, okay? Because what that means is now that the private sector, especially, that are impacted by the government policies, can easily sit back now and interpret what those policies mean for their businesses, and then take positions in terms of how they will run in 2021. So that one is a plus, quite all right. Now, the second thing will now be to look at the budget itself, and it's from two dimensions. One is what is the policy direction? Is it in line with the realities of what the environment is saying on the one hand? Then second part to it is whether the policy itself is internally consistent. And I will give an illustration of that very quickly. Now, the internal consistency of your fiscal plan for the year is that you want to encourage manufacturing of certain items, all right? If you want to do that, then your fiscal policy, especially with respect to import duties, should align with the direction you want to go. But if your import duty regime is making it easier for importers to bring in goods that are manufactured locally, then we say that that policy is internally inconsistent. So if you want to encourage domestic manufacturing, therefore, you cannot on the same breath encourage importation of the same items. So now, that means when we want to analyze the budget and the accompanying policies relating to monetary and, of course, commercial, all of them must be aligned and pull in the same direction. And that is where we begin to see how this will likely impact the economy and the value that it can create for us. So if you look at that, yes, in content, three major issues in the budget. One is allocation for capital expenditure. The second one is recurrent. And of course, the big number for us, which is debt servicing. Of course, like I remind people, in this era of COVID-19 and governments all around the world looking for resources to fight this health crisis, the issue is not about how much we are owing now. The issue is not about how much we have to spend in defraying maturing obligations on our sovereign debt. The issue is first and foremost survival, okay? Survival, that's for life on the one hand. Survival on the other hand, economic activities, okay? So you move from dealing with health crisis to now dealing with economic crisis so that they don't snowball into full humanitarian and security crisis. So those are the issues for now. So for me, therefore, the critical thing will be, yes, sign budget, capital expenditure and that. What will that mean for the construction industry, for example, this year? Now, for those who also provide, that is the downside, or let me say the downstream of that, and that is all those that are involved in the value chain, that supply inputs, that also supply labor services. What will that mean? What does that mean for job creation, for those that will benefit from those contracts? So those are the dimensions that will be positive because we had a budget signed early. The other thing, though, as you rightly said, is implementation. Implementation is about cash backing. You can announce in your budget what you intend to do, but if those activities are not cash backed, then it means you fully announced intention and there's no reality to it. So in which case, cash backing also, priority must be properly set. And that comes to sequencing. Sequencing means, yes, we have a budget approved, signed into law, quite all right. But in terms of prioritizing in the light of challenges with revenue mobilization. So we have again need to look at the sequencing properly before we can get value from this budget.
Well said. Dr. Nipe, I definitely must ask you this question, and it has to do with Forex. Businesses are back fully now, and everyone's back to business, and we see the demand coming in days because letters of credit, a lot of demands will be made. Manufacturers, we have to do some importation, machineries, equipment. How do you see the central bank managing all of this situation with what we've seen last year played out into this year? Are we going to continue with the same process?
Thank you so very much. I think the real challenge for me is not about central bank managing the situation. It is about our lifestyle in Nigeria. When you look at the data of importation, Nigeria consistently, since year 2013 up until 2020, our import bill has been growing. The latest trade data available for third quarter of 2020 showed that we imported on a monthly basis about 1.514 trillion naira worth of items. Okay? If you convert that to dollars using the official exchange rate, you will get something around $3.8 $1.9 billion every month. So the question is that if we continue to depend on imports, as we have done traditionally, the pressure on Naira will not change. It has nothing to do with government. It has nothing to do with central bank. Although the primary role of central bank also is to protect the domestic currency. And that is why oftentimes I disagree with analysts that want to criticize central bank and say they are defending the Naira. And I ask them, what else should the central bank do if it's not to protect the domestic currency? But that protection will not work until our consumption habit changes. If you don't consume what we produce in Nigeria, pressure will continue to be on the Naira. So until that changes, we may not see this particular change come, and pressure will continually be on the Central Bank of Nigeria. So the challenge then to CBN, as you asked in your question, is this. For Central Bank also to be able to manage this effectively, they must continually look at the requirements for manufacturers, priority sectors, to access FX from the official window. Because the bottom line of it is that if I'm a manufacturer and I can't access FX from the official window with CBN, I will look at alternative market segments. And by all means, FX will be more expensive in those alternative segments. And that will build into my cost of production, which eventually will translate into higher prices for my products. And so my product gets into the market more expensive than an imported, competing product. And so you turn around and say, what I'm producing is more expensive. Therefore, naturally, Nigerians will buy the one that is cheaper, even if the quality is poorer than my own. So all of these things play together. And until we have a policy, and this is my own recommendation, strongly to the government, you have a budget of 13.6 trillion naira in 2021. The government must be very, very, let me say, serious about the percentage of that budget that must be committed to buying things that are produced in Nigeria. Government must provide leadership in that. But not only that, it's something we need to work into our Finance Act, so that annually, as that is signed along with the budget, it will indicate that over this period of time, maybe in the next 10 years, get that percentage from 30 to 80%. If more of government expenditure is spent on what is produced in Nigeria, the arithmetic will change. And of course, the private sector also follows the lead of the federal government. By all means, the pressure on Naira will subside a little. And that is when the headache of Central Bank governor, I don't envy him. Whoever is the governor of Central Bank, I don't envy the person at this point in time of our history.
I must tell you, can we do this in 1 minute? Dr. Adedipe, what would you say? MPC meeting, we're going to have the first very soon, I think by the end of the month. We're going to have the first meeting. What are your expectations? Retention or any change?
Well, for me, as an analyst, I don't expect a change, and the reason is obvious. Because if you look at the trajectory of inflation rate, which is what the MPC is most sensitive to anyway, like any other central bank monetary policy committee, if you look at the trajectory, yes, inflation has been going up in Nigeria since May last year consistently, up until November, the data available, it's been going up quite all right. Yes, less than 15%, but the question for us is inflation rate going to trend upwards dramatically? I don't think it will. Yes, it may trend up because we are spending a lot this year in order to get the economy revived. Remember, we are in recession, but we expect a confirmation of recovery technically. And let me mention this also to the end, that even if all you have is 0.00001% growth, that immediately takes you out of recession, technically, all right? So the real issue for us is if this economy recovers as we project, yes, I agree with government that it will happen first quarter this year. Some analysts say it will happen second quarter, whichever way, all right? That happens this year. Normally, when the economy is growing, there's a bit of inflationary pressures it creates as well. But that is unlikely to take inflation to any level out of the range we are looking at. And that is why I think the MPC is unlikely to tinker with any of the rates in the next meeting they will have.
Dr. Biodun Adedipe, I must thank you very much for your time. It's always a pleasure talking to you. Chief Consultant B. Adedipe Associate joined us live from Owerri, Imo State. Thank you very much, sir.
Thank you for having me. Do have a wonderful day.
All right.